Hey, you're watching Channel 2.
The Nightly Business Report is brought to you locally by 3M, worldwide supplier of healthcare products, and by City Business, the inside look at local business.
It was another rough day for Mexican stocks, but along with the continuing turbulence there, storm clouds were building in Washington over the proposed Mexican rescue plan. So today, President Clinton moved to shore up support for his plan. Good evening, I'm Paul Kangas in Miami.
And I'm Kathy Seifert in New York. Many of Japan's biggest companies were hit hard by the earthquake, and aftershocks are beginning to be felt around the world.
NBR is made possible by Digital, doing whatever it takes to make information work for people, and not the other way around. Franklin and Templeton Worldwide formed the more than $115 billion Franklin Templeton Group, a global alliance of mutual funds and investment products distributed by investment professionals. A.G. Edwards, going beyond stocks and bonds with our Ultra Asset account, offering investors comprehensive information and services to help them manage their portfolios. And is produced in association with Reuters, which provides real-time and historical market data, news, and analytics over Quotron Advantage AE.
Suddenly, there's a battle looming in Congress over the proposed plan to rescue the Mexican economy. The first shots hit the Mexican market today, wounding stock prices. The Bolsa's IPC index fell more than 53 points, losing about 2.5% in value. But as Dennis Moore reports, today President Clinton stepped onto the battlefield.
The president assembled his old business allies from the NAFTA battle to take a new message to Congress. Don't let this crisis undo the economic progress that the trade treaty has brought.
The livelihoods of thousands and thousands of our workers depend upon continued strong export growth to Mexico. That's why we must reach out and not retreat.
The U.S. plan to back Mexican loans has boosted stocks on the Bolsa and bolstered bond sales for now. But a NAFTA-style political battle in Congress could quickly undermine the market's recent confidence. And that's what the president's old NAFTA foes are trying to mount.
The Salinas regime deceived us about the value of the peso. It deceived us about the extent of Mexico's reserves behind that peso.
Buchanan charges Presidents Salinas and Zedillo with defrauding millions of American investors who put their money into Mexican stocks, bonds, and mutual funds. Meanwhile, liberal critics claim it's investors and bankers and brokers, not Mexicans, who are really being rescued this time.
It is a bailout that, for all things that looks to me right now, is it takes care of all the international financial institutions and international bankers. But I'm wondering about the impact on the Mexican worker.
Both Democrat and Republican skeptics want economic reforms they say will prevent such a crisis from happening again, and they want Mexico to pledge oil revenue or other collateral to protect the U.S. Treasury. The Vice President and the Treasury Secretary and the Federal Reserve Chairman were on Capitol Hill lobbying reluctant congressmen and senators again today. They don't have the votes yet, but analysts are looking for a repeat of the NAFTA victory scenario.
I think over the next few days, opposition is going to mount. I ultimately think, though, the Congress will approve the loan guarantee package. Not as quickly as everybody hoped, but they'll still approve it.
And the hope tonight is for congressional hearings on the Mexican rescue package this week and a vote sometime next week. And a hope for the markets to be willing to wait that long. Dennis Moore, NBR, Washington.
The Federal Reserve said today the nation's economy is still growing and prices and inflation expectations are on the rise. The Fed's latest Beige Book survey found that raw material prices are continuing to rise, but retail prices held steady during the holiday season due to widespread discounting. The survey also found that higher interest rates are slowing single-family home sales. The Fed will use the survey's results during its open market committee meeting on January 31st to determine whether to raise interest rates again.
Stocks on Wall Street opened modestly lower this morning as yesterday's late rally, which cut a 15-point deficit in the Dow Industrial Average to a closing loss of only 1 2/3, failed to carry over, mainly due to a sell-off in the bond market today, triggered by word that Federal Reserve Vice Chairman Alan Blinder sees the need for another interest rate increase. In a steady morning-long slide then, where market breadth was 11 to 9 negative, The Dow Industrial Average posted nearly a 21-point loss at noontime. Throughout the afternoon, the market slowly improved as bond prices made a comeback. So the Dow Jones Industrial Average finally cut its closing loss to only 1.68 points, putting it at 3928.98. That loss of 1.68 is exactly what it lost yesterday, a truly statistical oddity there. It closed 2 1/3 points below its best level of the day, and the Dow was up 23 points from its worst level, so it did make a nice comeback. And volume picked up about 11 million shares from yesterday's pace, but more down volume than up volume by a modest margin. The Dow Transports gained a little over 2.5 points. Utility index up 0.66. The closing tick slightly bullish at plus 253. Standard & Poor's 500 lost 1/3 of a point. The 100 down 0.14. Mid-cap 400 fell 0.27. And the Commodity Research Bureau index gained just over 1 point after a big jump of over 2 points yesterday. The New York Stock Exchange Composite Index down 0.28. Similar loss on the value line. And the Wilshire 5000 down just a little over 3 1/2 points. Bond prices moved down a little over a 1/4 point in the long end early today on news that November business sales rose a strong 1%, while inventories edged up 0.7%. Also hurting were signs of inflation in the Beige Book report, along with Fed Vice Chairman Blinder's hint that another hike in rates may be needed to quash inflation. But prices improved after the Treasury announced next week's 2- and 5-year note auctions would total $28.25 billion, just as expected, not larger. Tax-frees ended up 1/8 of a point, and corporates and long-term governments made a comeback to close unchanged. We see the long Treasuries, no change on the day. Lehman Brothers Long Bond Index, no change there at all. And Fed funds all the way down to a flat 5% at the close. Later, I'll show you where the action was on Wall Street today. Cassie?
Much of the U.S. auto industry could be crippled as a result of a strike that broke out today at a GM parts plant in Flint, Michigan. The factory makes spark plugs, filters, and other parts for GM, but it also supplies parts to Ford and Chrysler. GM officials refuse to discuss the dispute or the effects that the strike might have on the industry. But analysts say the need for quick delivery of parts will make all three automakers vulnerable to a disruption of supplies.
The stock of American Airlines parent AMR rose an 1/8 point today to close at 58 7/8. AMR said that it made a profit of $228 million, or $2.26 a share for the year, compared to a loss of $2.23 a share a year ago. And the company narrowed its fourth quarter loss to $123 million, or $1.70 a share, and that compares to a loss of $3.55 a share a year ago. The airline said today it would continue cutting costs this year, and as Jeff Yasteen reports, that's a theme being echoed throughout the industry.
American CEO Robert Crandall said pricing pressures held back the company's 1994 profits, but the name of the game in 1995, cut costs while putting the company's restructuring plan into place. Analysts say industry-wide, that's the goal.
You look at Delta Airlines with their $2.2 billion cost-cutting program. Every airline now has a major cost-cutting program. So you can either cut costs within the existing operation, but what the message is that you can't start up an airline within an airline.
That's a reference to Continental and its short-haul unit, Continental Light. The carrier was trying to emulate the success of Southwest Airlines, but found losses instead. It's now dropping less popular light flights while bringing back perks once cut from its frequent flyer program.
We ought to keep the parts that make some money and stop doing things that lose money. But no, I think the product is a good idea. It needs to be implemented correctly.
Continental also announced last week it would lay off 10% of its total workforce, about 4,000 people. It marks the end of the first challenge by a major airline to Southwest short-haul business. It did cost Southwest some fourth quarter profits, but CEO Herb Kelleher says he doesn't think that will be the case this year.
Partly because of the fare sales that were very drastic during the fourth quarter. Partly because, of course, we have more competitors coming along in our niche. But we're very hopeful although I can't promise or prognosticate, we're very hopeful that will be a fairly short-term situation.
Among the major carriers, analysts expect Delta to show the most improvement in 1995. The carrier has already identified about $2 billion worth of cuts. Analysts say the first of those cuts will take effect this summer. Jeff Yasteen, NBR, New York.
American Airlines did suffer a setback in the Supreme Court today. The High Court ruled that a class action lawsuit by unhappy frequent flyers can go forward. The court ruled that passengers can sue airlines that retroactively restrict their frequent flyer club benefits. Many airlines changed their programs to limit the number of seats available for free and discount ticket holders, and also placed limitations on the days those kinds of tickets could be used. And the court also ruled in favor of Nations Bank, saying national banks in mid-size and large cities may sell annuities. A lower court ruled that annuities could only be sold by national banks in cities with fewer than 5,000 people. But the controller of the currency joined Nations Bank in arguing that brokerage of annuities is an incidental power necessary to carry on the business of banking. And today, the High Court agreed.
The head of Orange County, California's county's restructuring team has lowered the bankrupt county's investment loss estimate to $1.7 billion from $2 billion. Thomas Hayes says the $330 million reduction is the result of accounting adjustments and proceeds from well-received security sales. The Orange County crisis has generated dozens of lawsuits that may take years to settle. Some critics say lawyers have been too quick to file securities lawsuits alleging fraud. A bill filed on Capitol Hill today aims to change that. Darren Gersh reports.
Lawmakers who favor securities litigation reform say it's time to tighten the rules governing class action shareholder lawsuits, making it harder for investors to sue corporations.
Essentially, we are trying to make the entire process more fair.
The reforms are designed to prevent so-called strike suits against high-tech companies. Executives for high-tech startups claim lawyers file lawsuits alleging fraud whenever their stock takes a large drop in price. The companies say they are often forced to settle to avoid a costly legal battle.
These lawsuits not only cost the high-tech companies money, they cost everybody money. And the only people that benefit primarily are the lawyers.
The strictest provisions are called for in a bill introduced as part of the Republican Contract with America. The bill would raise the standard of proof for investors, forcing them to prove a company knew it was making a false statement or that it intentionally left out an important fact. The House bill would also require the losing side to pay the winner's legal fees.
I want Congress to know my story.
Across the Capitol, the securities lawyers brought their own witnesses, retired policemen and teenagers with money tied up in the Orange County bankruptcy. The critics say the House bill would shift the balance of power too far.
This bill is wrong, just plain wrong in the way in which it discriminates against ordinary Americans' ability to take on the largest corporations in this country.
The small investors say the loser pays provisions would hit them especially hard.
We couldn't take the chance of facing the cadre of attorneys that Merrill Lynch or a company like them could put forward.
Attempts to cut down on liability lawsuits routinely died in the Democratic-controlled Congress. Now, with Republicans in charge, supporters are hoping they'll have better luck this year. Darren Gersh, NBR, Washington.
The devastation caused by the earthquake in Kobe, Japan, is beginning to shut down some of the nation's largest industrial companies. Collapsed highways and damaged railroad tracks surrounding Kobe have delayed shipments of raw materials to other parts of the country. Toyota has shut down production at all 12 of its automotive plants for the rest of the week, and Honda has closed a factory that normally receives tires from a supplier in Kobe. And there's no word yet on when Kobe's busy port may be reopened. Joining me now to further discuss the economic impact of the tragedy is David Ressler, chief economist at Nomura Securities. David, damage estimates now stand between $20 billion and $140 billion. How will that impact world economies?
Certainly, if it's $140 billion, the impact would be extraordinary. $20 billion is the lowest estimate I've seen. Those were estimates that were out early this morning. And it will have an impact on the world economy. The world economy is going to be called upon to produce more goods to help Japan rebuild. Japan will have to produce more goods and services to rebuild. So there is kind of a silver lining in this ugly cloud, and that is that it's going to probably jumpstart the Japanese economy for faster growth. But in the interim, we're going to have several weeks, months perhaps, where the Japanese economy is going to be so severely disrupted it may not be able to do much of anything.
And what about trade? Now, Kobe is a very important port. About 12% of Japan's exports leave there. How will that impact the U.S.?
I think that there will be a temporary disruption of trade outflows from Japan because that which goes through Kobe can't go now. It'll have to be diverted to go through other ports, and I suspect they'll pick up the slack until the Kobe ports are rebuilt. But in the meantime, there will be some damage done to Japan's exports. Toyota's shut down some of its production facilities. It's not going to be able to make as many cars for exports to the U.S., and the U.S. imports about $15 billion worth of cars a year from Japan. So those could have some very big impacts on, at least in the short run, on apparent U.S. economic growth by lowering our trade deficit.
We just have a couple of seconds left. What should investors be doing right now here in the U.S.?
Well, I think the first thing to do in a catastrophe of this sort is to stand back and, wait till some tangible data is through. But the property losses to insurance companies and to companies in Japan is going to be very devastating, and I'd be very cautious about investing money right now.
All right. Thank you very much. David Ressler of Nomura Securities. After the market closed, Microsoft reported a 29% increase in its second quarter profits. The computer software giant says it earned $373 million, or 60 cents a share, up from 48 cents a year ago. Microsoft says sales reached record levels during the period, with particularly strong European performance. The stock gained 7/16 today to close at 65 1/16. Meanwhile, Digital Equipment surprised Wall Street today by posting its first quarterly profit in a year and a half. The computer giant says it earned 7 cents a share in its second quarter, compared to a loss of 53 cents a year ago. Digital credits the turnaround to strong product demand and its deep cost-cutting program of the last 2 years. Paul, Digital has eliminated 25% of its workforce in just 12 months.
The stock was in the big board active list, and it lost a fraction. We'll see it just shortly. The Dow Jones Industrial Average for the second straight day lost exactly the same amount, 1.68 points, and both days it made a nice comeback late in the session. Very unusual to have the same exact drop on one day after the other. But we see about 100 more issues close lower than higher, so that reversed an earlier uptrend by the broader market. 51 new issues for new highs and versus 29 new lows for the year. RGR Nabisco topped the active list on a heavy 22.1 million shares, down an eighth. International Game Technology fell 7/8. First quarter earnings lower, 19 cents versus 23 cents. The company said research and development costs offset a 6.9% jump in revenues. The stock traded as low as 12.5 today. Telmex down a quarter, although that IPC index, as you heard, was down 2.4% today. Santa Fe Pacific was up 3/8, reacting to Union Pacific's sweetened $18.50 buyout bid for all the shares, up from $17.50 for part of them. Kmart up 3/8 of a point yesterday. The company announced Donald Perkins will replace Joseph Antonini as chairman. Antonini will stay on as president. Digital Equipment, there you see it down 3/4 of a point, despite that the black ink that it reported. General Motors down 1 3/8, and Walmart dropped a quarter. Ford Motor losing a half point. And Citicorp, no change at all. Of course, yesterday the company announced it'll increase, or actually double, its quarterly dividend from 15 to 30 cents a share. American International Group down 1.5. I'm told the reason is it may have exposure to Japanese earthquake damage claims. Amphenol was down 1 1/4 points. The company did report higher fourth quarter earnings of 28 cents, up from 17 cents, but it also filed a 3.4 million share secondary offering. Office Depot moved up 3/4 of a point after the Smith Barney brokerage started covering the stock today with an outperform rating. Pfizer gained 2 full points. Fourth quarter earnings nicely higher, $1.08, up from 92 cents last year. That was above street estimates. Procter & Gamble, one of the bigger losers in the Dow Industrial Average, down 1 3/8. And Wells Fargo tumbling 5 5/8 after the Goldman Sachs brokerage removed it from its recommended list. Quorum Healthcare gained 1 5/8. The company is in talks to buy Caremark's home infusion therapy division. Williams Companies gained 1 7/8. The company completed its $17.50 a share tender offer for Transco Energy today, and it will take in 24.6 million shares. Also, Williams said that it canceled its participation in the building of an oil refinery near Phoenix, Arizona. King World Productions rose 1 5/8. Prudential Securities increased its rating on the company from hold to buy, and also increased earnings estimates. Raychem Corp rose 1 1/2. Second quarter earnings way up, 45 cents, up from only 4 cents last year. Revenues up nearly 8%. Edison Brothers Stores, one of the big percentage losers, down 1 3/8. Chairman Andrew Newman and President Martin Snyder will retire this spring. Alan Miller will become the new chairman, CEO, and president of the firm. And Lennar, the Florida home builder, down 1 1/4 after reporting lower fourth quarter earnings of 47 cents, down from last year's 58 cents. Revenues in the period dropped 8.3%. Over the American or the NASDAQ index, we see a gain of 0.24, volume up about 11 million shares from yesterday's pace, about 15 stocks up for every 17 down. Intel topped the active list up 2 3/8. Of course, yesterday the company had lower earnings, but that reflected a 70-cent charge because of the Pentium flaw problems. Today, Morgan Stanley, Prudential Securities, Alex Brown all upgraded their opinion of Intel, and Merrill Lynch increased earnings estimates. Adaptec had a good day, rising 5 1/8. Third quarter earnings nicely higher, 52 cents up from 29 cents. Morgan Stanley increased 96 earnings estimates. Microsoft, you just heard about the 29% earnings jump. Sun Microsystems down 1 5/8. Second quarter earnings sharply higher, 83 cents versus 46 cents on 30% increase in revenues. But First Boston still downgraded the stock from buy to hold. And Stratacom losing 1 1/fraction. The story here, 23 cents in fourth quarter earnings, way up from 6 cents last year. But Wheat First Securities still downgraded the stock. Sybase off 5/8. BMC Software moving up 2 3/4. Cisco System lost 1/8. Quartus down a point. Applied Materials down 1/4 point. Pacific Bank up 5 3/8 on news it'll be acquired by Western Bank for no less than $20 a share cash. Summa4, a 3-point gainer. Third quarter earnings lower, 24 cents versus 27 cents last year. Actually, that was better than estimates, and the company's also in a multi-million-dollar pact with MCI Communications. And Boomtown, the casino firm, down 2 1/4 points. The company will acquire National Gaming in a stock swap at about a share-for-share basis. Over the American Exchange, a gain of 0.88 of the market value index, and volume up about 3.5 million shares from yesterday's pace. 252 stocks higher, but 269 were lower. Viacom B for the third straight session topped the active list today on just over 1 million shares, down 1/4. And look at this gain. Bethlehem Corporation, which is involved in environmental equipment, up 3 3/4. The stock jumped 3/4 yesterday after reporting a big second quarter earnings turnaround. Earnings of 5 cents versus a loss of 43 cents last year. And Tipperary Corporation up 15/16 of a point. The company confirmed that it found methane in one of its Australian digs. And that is our Wall Street wrap-up.
Coming up, a look at what the nation's budget deficit might mean to you in tonight's Money File.
Inflation is rising in Britain. According to figures released today, inflation rose 2.9% in December compared to 2.6% in November. That was higher than analysts had expected. It fueled speculation about a possible interest rate increase to cool down the British economy. At the same time, unemployment fell in December to 8.6%, its lowest level in 3 years.
The American Petroleum Institute said today that foreign oil imports reached a record high last year as U.S. production dropped to the lowest level in 40 years. And the industry group says for the first time, imports filled more than half of all domestic oil demand. The federal government has warned that growing reliance on imported oil could prove a threat to national security.
In tonight's Money File, Terry Savage, author of New Money Strategies for the 90s and Beyond, discusses the impact of the federal budget deficit on the economy.
The United States now has a $4.3 trillion national debt. That's called a MIGO number. It stands for My Eyes Glaze Over. Put it in perspective, the total single-family mortgage debt in the United States is $3.1 trillion. So our government has borrowed 30% more than all its citizens have borrowed on all the mortgages on all the homes in the United States. And those homes were a good investment. This year, the government will spend about $1.5 trillion and will take in only about $1.3 trillion in revenue. That will leave a budget deficit estimated to be almost $200 billion, give or take a few billion. Our country hasn't had a balanced budget since 1969. The sum total of all those annual budget deficits is the national debt. It's no abstract concept. It's money borrowed by selling Treasury bills, notes, and bonds. We pay interest to borrow that money. Last year, the bill was $203 billion. For this year, the Congressional Budget Office estimates the interest bill will be $235 billion. Think about it. If we didn't know all that interest on our past borrowings, we wouldn't have a budget deficit this year. It's sort of like your credit cards. If the interest didn't keep piling up, you might have a shot at paying down the balance. Of course, the federal government has an option consumers don't have. Just print the money to repay the debt. Maybe that's what the world is worried about. And maybe that's the real reason the Fed is keeping interest rates so high, to keep our dollar attractive as an investment, so we can keep on selling our growing debt. I'm Terry Savage.
And that's this edition of NBR for Wednesday, January 18th. I'm Cassie Seifert in New York. Thank you for joining us. I'll see you tomorrow, Paul.
Good night, Cassie. I'm Paul Kangas in Miami, wishing all of you the best of goodbyes.
NBR is produced in association with Reuters, which provides real-time and historical market data, news, and analytics over Quotron Advantage AE. And is made possible by A.G. Edwards, going beyond stocks and bonds with our Ultra Asset account, offering investors comprehensive information and services to help them manage their portfolios. Franklin & Templeton Worldwide formed the more than $115 billion Franklin Templeton Group, a global alliance of over 110 mutual funds and investment products, including U.S. government securities funds. Digital, doing whatever it takes to make information work for people, and not the other way around. And by the financial support of viewers like you. Transcripts of portions of the Nightly Business Report may be accessed on your computer through NBR Online, part of the America Online Interactive Service. NBR transcripts become available online 18 hours after completion of the broadcast.
The Nightly Business Report is brought to you locally by 3M, worldwide supplier of healthcare products, and by City Business, the inside look at local business.
Tonight, Newsnight Minnesota boldly goes where other news doesn't take you. The folks on this old house are bringing down the ceiling, and the Nixon administration lends a hand in America's war on poverty. Tonight on Channel 2.
I'm Jack Willis, president of Twin Cities Public Television, with an urgent message. Public broadcasting is fighting for its life. There are those in Congress who would stop all federal funding for public broadcasting. This means 3 of Minnesota's 5 public stations would go off the air, and KTCA would cut back its national schedule and seriously curtail its local programming. Just imagine, no almanac, no news night, no lost Twin Cities, no tapes rolling. If you care about public broadcasting, please write. Let them know how you feel. Your opinion will make all the difference, and there's no time to waste.
For more information on your congressman and where to write, please call 229-3026.
This week, Congress is debating the future of public television. This Thursday night, Channel 2 is inviting you to come to our studios to voice your opinion, pro or con, to your congressman. You can do it live on the air or watch from home. So grab the kids, friends, whoever you can find on Thursday night, and let your voice be heard. We'll have the pencils ready.
Wednesday night's broadcast schedule is brought to you in part by Horton, manufacturer of truck cooling components and industrial clutches and brakes. Health Partners. The Health Partners' mission is to improve the health of its members and its community. Lindquist & Venom, a law firm that understands the business and legal needs of its clients. Cargill, supporting Minnesota's tradition of community service. And by the members of Channel 2.
You know, Z, the producers don't have a clue what's going to be an almanac this week.
Well, here's the deal. Tune in next Friday at 7 o'clock and find out what's going on.
You could have an almanac party. Men could wear scarves.
Well, what about women?
Them too.
All right.
Almanac Friday at 7.
See you then.